What is up, everybody? Welcome back to another exciting episode of Fed Watch. My name is Ansel Lindner. I am here with my co-host, CK. How are you doing, CK?
What is up, Ansel? I'm doing great, my man. Doing great. Excited to chat macro once again. And happy holidays to everyone out there watching. Thanks for tuning in to Bitcoin Magazine Live. Thanks for tuning in to Fed Watch. On this show, we talk Bitcoin and macro, and we think about how Bitcoin plays in as a bigger part of the macro ecosystem. So we are one of the only shows in the world that actually does this. Ansel does incredible research and has been ahead of many elements of the developing crisis in fiat legacy markets, as well as Bitcoin's development. So, Ansel, excited to be here once again with you to chat.
Yeah, Merry Christmas to everybody out there. Thanks for joining us. The macro news cycle has been a little bit slow over the last, I would say, 48 hours. But there was some big news this week, and that was Japan with their relaxation of yield curve control. So we're going to cover that. Also, this morning we had some revisions to the U.S. GDP from Q3, so we'll cover that. And just wrap about some macro, what's going on, and sign off for the Christmas break after that.
Yeah, no, absolutely. And we got to talk Bitcoin price. It's been scary looking at that chart, honestly, Ansel. I don't know what you make of it. You're generally I would say more bullish in the medium term than many, but it's a scary looking chart. So I'm excited to get your opinion on that as well.
Oh yeah, well should we jump right into the charts?
Well, no, before we do that,
Okay.
I'd be remiss if I don't shill the Bitcoin conference, Bitcoin
Yeah.
2023, May 18th through the 20th in Miami Beach, Florida. Ansel's going to be there. I'm going to be there. I'm excited to get him on the desk. It's honestly a long time coming for you to be a part of the conference content. So hopefully we can make that happen. But, meet Bitcoiners, Bitcoin Twitter in life, Noster in real life. Like, come on. You cannot beat the Bitcoin conference. It was the first time I met Ansel, even after interacting with him for years online. That was in 2021. And, it's really an incredible experience. Bitcoiners are best in person, and the Bitcoin conference is where Bitcoin history is made. Code BM Live. That gets you 10% off your tickets. Ticket prices are always going up. We also have a lot of awesome platforms and projects out there for people to take advantage and get a free ticket. We have an open source program where if you have committed code to one of many open source programs or softwares in the Bitcoin world, that includes Bitcoin Core, Spectre, many others out there. Seed Signer is another one. If you have contributed code, you can get a free 4-day ticket to the Bitcoin conference. So apply to that to all the contributors out there. And again, all the Bitcoiners out there, be a part of history. Come to the Bitcoin conference and don't wait, because ticket prices, travel costs, all that is going up, and you can't miss it.
That is pretty huge. Bitcoin Magazine always taking care of the community, putting the community first, putting Bitcoin first. Gotta love that. Yeah, I'm excited, man. Every year, I've gone now 2 years in a row, and it seems like I have to go back because I didn't do half the stuff I wanted to do. There's so much going on. I was talking to producer Chris beforehand, and I think this year I want to spend more time with Bitcoiners. So, maybe not go to as many talks and spend more time in the social aspect of it. So, yeah, I can't wait. Can't wait for Bitcoin 2023. All right. My admin notes are, hey, join the Telegram, t.me/Bitcoin and markets. That is the place where I drop, multiple pieces of content every day. I also do a live stream there every single day. And I'm putting those out on my podcast app. So subscribe to Bitcoin and Markets on your podcast app to not miss an episode of that. All right.
Well, hey, no, I'm sorry.
Yeah.
I got to double click on that shell and just say Ansel, in my opinion, one of the highest signal individuals out there, and he is putting out content every single day and sometimes twice a day. So subscribe to his Telegram, subscribe to Bitcoin and Markets. I am an avid listener for a long time. and obviously subscribe to Fed Watch, where we break down macro and Bitcoin. All right, Ansel, let's get into the charts.
Like, subscribe this stream right here. All right. Yeah, let's go into the charts. The first slide up, CK. Did you see this one? We're bringing some soccer into here. So the
Yeah, not quite some
Argentine
charts, but yeah.
the Argentine team is carnivore, man. So did you see this?
No, I mean, I don't know how carnivore, but Argentina is all about meat, and when it comes to beef, Argentina is one of the most famous places in the world. I'm actually going to be going to Argentina very soon, and I'm
Really?
excited to indulge in the South American and Argentinian beef.
Oh, that's awesome. Yeah, I always see you're posting pictures of your uh, awesome meals. So I thought you would appreciate this first little clip here, or this first
Oh,
tweet.
no, 100%. And congratulations to Argentina and Messi in particular, who is, if he wasn't already the greatest of all time, I think he's completed that, and that was an epic soccer game. So, football game to all those.
Football.
Yeah, absolutely, cementing his legacy. That's what Chris said in the chat down here. Absolutely, and it was just so much fun to watch. So, cheers to them, and obviously, that's a cool picture. I'm glad they're having a good time.
All right, let's jump into the first chart, and that is the Bitcoin chart. This one I kind of showed last week, and you can see I put on here all of the major
I love
events
these charts.
that have happened over the last 6 months. So Terra Luna, Celsius, FTX. Of course, we had some other little ones in there, or some other ones in there, but these are the big major ones. And I maintain that if you take out these big incidents, where the price sold off dramatically because of the fear and uncertainty and doubt in the market, then Bitcoin would be sideways, right? Like, take out these big days, down days, and Bitcoin has been very, very strong for most of the year. I think people need to, like, at least, I think people get too worried about, there's going to be some catastrophic collapse in the price or whatever. And like you were saying there before, that it doesn't look good. But if you look at this in the whole year, the only time Bitcoin has really collapsed has been during these major events. So there has to be some other major event, I think, to push the price down lower. Any comments on this chart, CK?
Unfortunately, I feel like there's more major events coming. But a lot of people have been saying the catastrophic bad news is already priced in, and maybe that is the case.
Yeah.
But I don't quite think that we're out of the woods yet in terms of the big over leveraged ecosystem players. Chris, we can see your Slack on the screen, by the way. Thank you. Yep. So yeah, I mean, in terms of these big ecosystem players, I don't think we're out of the woods. I think the over leveraging is still there, and there's definitely a few already that are dead, and it just hasn't come to
They haven't filed
fruition.
bankruptcy yet.
Yeah. Yeah, I mean, like Core Scientific, that they had this announcement that they were getting this massive $70 million bailout loan, and then a few days later they filed for bankruptcy. So yeah, even the most optimistic cases, I think some of these deals are not going to be able to go through, and there's going to be more dead bodies.
Well, looking at this chart, to me, I don't see much else in this chart. So when people say, Bitcoin is correlated to stocks or whatever, there's not much else. Those three big events that I pointed out are really the story of the year for Bitcoin, and it's not super correlated with other things. And just, I guess, the overall climate, the overall macroeconomic climate is such that, yeah, there's correlation, but really there's no like direct influence between, say, the S&P 500 and Bitcoin. Let's go on to the
Ansel,
next. Yeah.
wait, before, did you see some of the comments that Chris put up on the screen
No.
from the chat? GBTC, people are calling that out. People saying Grace, or people saying that MicroStrategy is using custodians. Yeah.
Oh yeah.
They're all getting flashed up again. Yeah, those are just some of the big names.
Yeah, but they're also regulated names, right? So they have to
Well, the
file things.
regulators don't work, and then they say they need more regulation. It's a hilarious clown show.
That's true. That's true. I mean, it has to stop with somebody, right? Somebody's got to be the person that holds up that last domino, and I think that the companies that are remaining, Binance kind of worries me a little bit, but GBTC really doesn't bother me or doesn't worry me, and neither does MicroStrategy. So I think people are just they have a little PTSD and they want to see the next thing collapse. So
Why doesn't GBTC worry you?
because they have the Bitcoin. It's not like they have paper Bitcoin on their balance sheet or anything. They are not insolvent. So
They just have a bunch of angry creditors,
well,
or not
Grace,
creditors, angry stakeholders, shareholders.
well, DCG, yeah,
Yeah, DCG's it has issues with Genesis.
yeah, DCG is a different story, but GBTC on its own is, it's a separate entity and it has the Bitcoin. And so it's not like DCG is going to steal from the Bitcoin out of GBTC to, pay something. So
Yep.
there's no commingling there as far as I can tell. So yeah, GBTC itself, the trust itself is totally solvent, totally fine. Great MicroStrategy, totally solvent, totally fine. It wouldn't really matter if they weren't in that case because they just owe it to themselves, I guess.
Well, I mean, I
And
guess the concern is that their Bitcoin is held by a custodian that might not have the Bitcoin.
well, he talked about that recently, right? He talked about that one of their custodians is Coinbase. Coinbase has like 2 million Bitcoins. I think they're completely solvent and okay. Then he didn't disclose the other two, but people kind of know what the other two are. And those are companies that I don't think are having any issues either. So overall, I think MicroStrategy's Bitcoin is secure and they probably have it in multi-sig. So a lot of these custodians that people are worried about as well, uh, they are custodians with one key, say, right? And so it's not necessarily that they could all have stolen the Bitcoins or anything. We don't know the specifics, and people jump to conclusions because of the PTSD in my mind. Now, I'm not saying I'm 100% sure, but I'm 90% sure that all of these players are fine at this point.
So you think sideways and up unless there's another big moment. And I think that there could be another big moment and we're unsure if it's been priced in or not.
Yeah. Yeah, my
All right.
little red rocket ship there is showing once we break that 19,000, I think it's clear sailing ahead. Let's go to the next chart because it zooms in a little bit. And you can see that previous trend line that was resistance for a long time has now been support. And so if we can hold on there and we can go sideways to higher, which is, I mean, 90% of the last 6 months has been sideways to higher. And if we can continue doing that, eventually we'll go into that resistance zone again, back above 19,000. And that's when I think a lot of people, the shorts get squeezed and a lot of people start going long.
All right. We'll see what happens, man. We'll see what happens. But that's the beautiful thing about this show. We document it every single week. And Ansel has been right more than he's been wrong. That's for sure.
Well, I mean, I did think we want to crash below 30. Then we crashed below 30. Then I thought we were going to break out when we had this false breakout with right before FTX. So I haven't been right all the time, but my sideways calls have been right, just not my breakout calls. So okay, let's go.
Hedge right here.
Let's go to the next chart, please. So this is the Treasury yields, U.S. Treasury yields. You like this chart, CK?
I love this chart. It's the Fed even in control.
Yeah, the stair step is showing the upper and lower bound of the Fed funds target range. Then, of course, these are the other, like, I guess, dated treasuries, the 2-year, 5-year, 30, and 10. You can see they're all significant. Even the 2-year is below the current Fed funds target range. So are they in control? CK, what are your thoughts on this updated chart here?
I mean, I love it, man. It's awesome to kind of just see this whole story falling apart. So I'm excited to see what the 2-year does and continue following what these longer dated bonds are going to do. But um, the current plan, it seems as though they're rate hiking. They're planning on tapering that and then holding it.
Hmm.
So if that's the narrative and these bonds keep doing the opposite, this is the big moment, which is, will like the kind of the lure, the mystery of the Fed be exposed, and their ability to dictate yields and interest rates. And, will that their inability of that to do that, which is the thesis of this show, will that become apparent?
Hmm.
So, um, this is kind of like the test of the thesis of this show. That's why I think it's such an important chart, because it appears to be confirming it.
Right. Yeah. And speaking of can central banks control, let's go dive into the Japanese yield curve control. So this is a close up of what just happened. Um, the horizontal line on the bottom was the previous ceiling. That was 0.25%. We talked about this back in June, CK, if you remember, when it started to break out above this yield curve control zone. And I said back then that, they can kind of control this, but they can't win. Eventually, they will fail, and we saw that happen just this week. They announced they're going to increase their ceiling from 0.25 to 0.5, and then you can see what happened on that very first next day. It just shot all the way up from 0.25, touching the top of the new range. If you go to the next slide, Chris, we see the longer term. This is the chart I showed back in June, and the cone just continues to get bigger as they can't control it. That's my position here. And a lot of people are thinking that, the 10-year yield or these yields are going to blow out in Japan. But I highlighted this one zone back in 2018 when they increased the window from plus or minus 0.1 to plus or minus 0.2. And you can see it initially, it did go up and test the top of that new range, but then it fell all the way down to the bottom. So are we going to see something similar to this? We also saw, if you look at the next time they increased, so that's 2021, it looked like it was testing the top of that range, and then it petered out. So the way I kind of describe this is that there is some pressure in the system for rates to go higher. And when they relax that pressure, or when they relax their ceiling, the pressure gets initially relieved, and then you have a reverse movement. So, CK, what do you think about these last two charts and about the Japanese yield curve control in general?
It's honestly kind of fascinating looking what happened in 2021, where it's exactly how you described: the increase, the ceiling, it tests up, drags down, and then begins building back up, and it coils up, and there's an enormous amount of pressure. They increase it, and it explodes back up. It's also fascinating seeing how much more violent this is. It's almost
Mm,
like it's in proportion with the new range being much bigger. Um, but that's just me visually looking at the chart. Um, yeah, there's no other basis for kind of saying that. I don't know. Like, again, for me as a layman, I'm looking at this and saying, like, this is why all of this is wrecked, and why we need to move to something much more simple, and that doesn't rely on all this kind of funny business, and that's Bitcoin mining. So, and that's Bitcoin's
mm,
monetary supply. So I'm excited, to usher that in, and I'm excited for the future that makes possible, because all of this on paper right here, like this messes with the economy, the global economy's ability to do business. Ultimately, that's what it does. When this financialization pretty much creates a distraction from, just the meat of it, of what we're trying to do here, which is trade and become more efficient and cooperate and build. So all of this stuff, it's turning the tool. It's like almost like misusing the tools, which is a monetary system, to achieve all the other goals of the state as it is today.
Yeah, great thoughts in there when you're talking about distorting the economy and distorting prices and all that. What this Let's dive into what yield curve control is, and then what exactly happened. I think how a good way to interpret what happened here. So, yield curve control is when I didn't put a chart in here. I should have had a chart for this, but when the central bank picks a certain tenor on the curve. So in this case, it's the 10-year Japanese government bond, and they pick a certain ceiling that they won't let the yield get above. And if there's market pressure trying to push it above that yield, then they will come in and buy QE. They'll do QE to push it back down. On the reverse side, if because this is a window plus or minus the 0.25 from zero. So if it goes below 0.25, negative 0.25, then they will go in and do QT to push the price or push the yield back higher. So they do it on both ways. But this is just another form of QE. I want to make that clear. So we have QE. Japan has QE. They also have QQE, which stands for qualitative and quantitative easing. So in quantitative easing, they buy usually government securities or mortgage-backed securities. Okay, so they buy treasuries or these mortgage-backed securities. But QQE, they buy everything. They go out there, they buy ETFs, they buy stocks, they buy everything there is. Probably corporate bonds and all of that. So that's quantitative and qualitative easing. Then that didn't work either. So first QE didn't work for Japan, then QQE didn't work for Japan for decades, right? Then they went to, in 2016, we just saw the chart, that they went to yield curve control, which is kind of like QQQE. It's just unlimited quantitative easing. And that hasn't worked either because they had to continually change the range that they're doing it. So they're doing one failed policy after the next. Now, a lot of people are saying that this was coordinated with the Fed or whatever, that they're either responding to the Fed or they're being coordinated with the Fed. But we saw there on the chart that this has been putting pressure on the top of this range, and they just moved the range. That's all we can say. Now, I think some people say that this could be a net negative on their economy because, as you said, it distorts prices, it distorts business. What happens when yields go up? That means prices of those bonds goes down, which if you are holding those bonds on your balance sheet as an asset, if you're a Japanese bank or money market fund or whatever, and you're holding these government
Prices
bonds,
of older bonds go down.
The price
of like the existing bonds that haven't
correct
been issued yet.
Correct. The price of the existing bonds goes down. So you're holding it on your balance sheet and you are doing your business based on 0.25% as a ceiling. So you're going to make your plans on this 0.25%. Then they do a unexpected surprise relaxation of that window up to 0.5. Well, the value of your bonds on your balance sheet have now gone down. So now you're insolvent. This triggered some emergency action by the BOJ. They came in and tried to save some pension funds and save some of these money market funds. And it rhymed a lot to what happened in the UK with the gilt market that we saw earlier this year. But the Japanese seem to plan for it and be ready for that, and they smoothed out a lot of that volatility. So, yeah, I just wanted to add this in there on that. Oh, and one more thing. So the way that this could be good for their economy. So that is the way it could be bad. The way it could be good is if you're relaxing the window, that means you're going to have to do less QE most likely, right? Because you do more QE to hold it down. Well, if you're holding it here, you're probably going to do less QE. So that means there's going to be more government bonds out in the economy. right? Because QE is really it's taking
it's sucking up the collateral.
it's sucking up the valuable collateral out of the system. Well, when you raise the window here, raise the ceiling, you're going to suck less collateral out of the system, and so that could be actually stimulatory to their economy, which is kind of crazy if you think about it. So there's competing forces here. We can't tell if this is going to be good or bad. I tend to come down on the side that this is actually going to help Japan a little bit. It's going to help their economy. So we'll see. We'll see how it goes. Any response to that, CK?
So you think that this is going to help because it's just more easing, and that's that's falling in line with where the market is going anyways.
It's less easing.
Yeah. Okay. Because they're allowing for a bigger window where they don't actually have to be active.
Right. Yeah. And one of the problems Japan has had, like I said, they failed over and over with QE, QQE, and yield curve control because they're just taking this much needed collateral out of the system. So they're perpetuating this deflationary environment.
Yeah.
If
you think of like the collateral in the system, like that's how
Yeah.
a debt-based system works. Is you need that collateral, and that's how a modern financial system has been working. Is you need that collateral. So if like the economy is like a body, and the collateral is like the blood of the body, and QE, where they're buying the collateral, they're buying up the blood and taking it out of the system because they're putting it on their balance sheets. Rather than allowing it to be priced and a liquid part of the market, that it's almost like sucking the blood out of the body, out of the economy. I guess what are your thoughts on that kind of analogy?
Yeah, that's perfect, man. I wrote a yield curve control piece back in is like May of 2021, and I was saying like why it wasn't going to work and all this. And I said that yield curve control is economic bloodletting. That's exactly what it is. So it's crazy
Maybe I got that from you.
maybe you came up with the same one as me, but exactly, man. It is. They are. In a credit-based system, you need a both ways. The plumbing needs to work in both ways, just like a circulatory system. And if you hamper, like just think if you don't let the blood come back to the lungs to get reoxygenated or whatever, then you end up dying, right? So yeah, it's bloodletting is what they're doing to the economy right now through QE. Now, if they're raising that ceiling and they're doing less QE, that could be good for the economy. Maybe it will cause some short-term havoc, but it will end up benefiting their economy. Also, Japan has not followed the same playbook as a lot of the other central banks, like the Fed being uber hawkish and the ECB being uber hawkish here. Japan has said, oh, no, we're just going to still do our same yield curve control and our same QQE process that we've always been doing. So they're kind of on the opposite end of the experiment as the Fed, which is kind of interesting. So we'll see how that works out. Bless you.
Thank you. No, it's fascinating kind of seeing it. And yeah, absolutely. Japan has kind of been the only central bank that hasn't bent to the Fed. We've seen Europe pivot with, following what the Fed was doing. We've seen what's happened and coming out of China. To some degree, we've seen, other central banks, the Central Bank of South Korea, saying like, hey, y'all are affecting us. But here's Japan, kind of just doing their thing. And just going back to that chart, they've been on this trend, which you're saying, actually lessens the need for QE since 2017. 2016, where they're kind of increasing the range of their of their yield control. Can you kind of talk to us, like, I guess since they've been kind of on this trend since that long, what was the environment there before that they were doing yield curve control? I guess they just weren't messing with that at all. I guess.
Well, they were doing QE. And QE
so only QE, and then yield curve control was kind of the next tool, and then that really came into play, in 2016.
Right. They were okay. So the idea behind yield curve control is they want the Fed or central banks. They want to have a nice sloping yield curve, because the banks can borrow short and lend long, right? You want to, banks will borrow for a week or a month, and they'll lend for 5, 10, 30 years. So they want to have this differential, and they want to be able to roll over their short-term loans constantly, so that they can, or their short-term sources of capital, so that they can, stay solvent, basically. But when we have a yield curve inversion, obviously the long-term rates are below, so you can't make a profit. That's really bad for banks' balance sheets. Obviously, it means that they're about to go out of business. And so then what yield curve control wants to do is it wants to peg, usually it's a shorter term rate. Now, this is a little bit different with the 10-year, which I'll talk about here in a second, but it's usually, like, say, the 2-year. They'll want to peg the shorter term rate, and what they think that will do is, to peg it, they use QE. And they think, oh, okay, that's going to flood money out into the market. We're doing QE, so it's going to be stimulatory and inflationary. And what will happen is that will push up the long end, so that then the banks can borrow short at this suppressed rate, and they can lend long at these inflated rates. So they think it's going to force the yield curve into a nice upward sloping yield curve. Now, what Japan did was they pegged the 10-year, which is pretty much right smack dab in the middle of the curve. Why would they do that? Because they wanted a flat curve. They have been trying to get inflation forever, and they thought the best way to do it is, let's just flatten the whole damn thing. Let's just, they think we can get inflation by pegging the 2-year. We're going to show them what real inflation is. We're going to peg the 10-year, and that's going to be real inflation. Never happened. Okay. Never happened. Didn't work initially. They had to change the peg. That didn't work again. They changed it again. So this is really the third try of yield curve control, which itself is the third try of QE, and none of their plans ever work out.
Yeah, and this is almost like them retreating back.
Yeah, for sure.
All right, thank you for breaking that down for us. These are some complex topics here, guys.
Yes.
And Ansel is the one who's done the most studying here. I'm just the guy asking the dumb questions.
Well, for guys listening on the podcast app, you can, in the show notes, I'll put a link to the article that I wrote 18 months ago about yield curve control, and that, it's a 10-minute read, but we'll get you up to speed pretty quick. All right, should we go into, I only have one more macro chart, and that's the dollar, if we want to talk about that.
Let's do it.
Okay, Chris, can we go to the next slide, please? So this is just, the dollar has been kind of boring, sitting at 104. It's been 106 to 104 for months now, since basically the end of October. And I'm just reading this question here. Does Ansel believe the dollar has topped out? Long term, no, but for the medium term, yes. I think the dollar will eventually enter a new range, just like it did in 2015 for several years, and the way it did after the great financial crisis for several years. I think the dollar will enter a new range around this area, and then in the future, maybe 4 or 5 years down the road, then it will break out higher again. And this is the script that has been written by a deflationary outcome to this problem. So the dollar will continue to strengthen. And that kind of explains what I think is going on with this chart. We've kind of bottomed for the time being. We're trying to create a bottom to a new range that the dollar is going to sit in. And that's what I have to say about this chart. CK, what are your thoughts on the dollar?
No, I don't have really strong thoughts here. I kind of like seeing it historically and trying to think through the rates and how the last year of history have kind of played out in conjunction to this chart. I feel like this chart, I feel like there are actual events that are happening in the world as this chart is making new highs and then slumping back. So, that my mind was just kind of going through that as you're talking through, how you think that, we're creating a new range here for the dollar at higher levels. I mean, it does seem as though the dollar rips up. Everyone scrambles to make a lot of different changes to adjust for it. Obviously that has a little bit of a dampening effect, and now we're in a new normal. So that it feels like it fits with the narrative. But I guess that's all I have to add.
Yeah, and one of the things that there's some forces out here that kind of create this back and forth with the dollar, and why I think that it's just going to enter a new higher range. I didn't include it this week, but people that listen on a regular basis know the Hong Kong dollar chart that I like to show. And the Hong Kong dollar is a peg between 7.75 and 7.85 Hong Kong dollars per dollar. And when it's at the top of that range, that means there's a lot of dollar pressure in the world. That's a proxy that I use for dollar pressure. Well, when did that top out? That topped out right as this chart, the dollar chart, started falling. And so now we are towards the bottom half of that Hong Kong dollar peg. And that means to me that there is very little dollar pressure in the world. And we'll go back and forth between those two pegs because that's actual market intervention. Okay. The Hong Kong Monetary Authority, they go out there and they will sell dollars from their reserves, billions of dollars from their reserves, and buy Hong Kong dollars, right, to strengthen the Hong Kong dollar. And they'll do the reverse at the bottom. So that is actual monetary force in the world of billions of dollars that is forcing the dollar into a new range. There's also a lot of things like at the top, when the dollar stress is very acute, the worst players go bankrupt. The worst players get liquidated. And who's left? Well, it's going to be the people that can, the people that are in less trouble. So yeah, there is still a strong dollar force, but it's not as acute because all of the worst players have been liquidated out of the system. So and then as the dollar drops, new players come in, they get more profligate, they get a little bit more risky with their dollar loans, and the dollar strengthens again. So there's all sorts of ebb and flows here, why the dollar should enter a new higher range. Now, the only argument against that, in my opinion, is when people say, oh, isn't the end of the dollar inflationary? Why doesn't the government just print more dollars? And I got into this on Telegram this morning with one of the guys there. He was asking pretty much that question. And I was like, well, printing money today is not like printing money in 1975 or whatever, because back then there was a lot more productivity per new dollar. Today, pretty much every new dollar is printed just to service the debts. And so you can print a whole bunch of money, but it's not a net printing of dollars. And that's where we're kind of at in the world, and why the dollar will continue to strengthen and not weaken. What do you think of that, CK?
Yeah, and I mean, it does seem like there's the economic reality around the world is very different, and I think the digital nature of a lot of this technology also is really kind of interesting in terms of a like inflationary perspective. It's maybe the mechanism to distribute funds technologically exists, but it seems like there's an issue distributing funds right now and distributing currency. I don't know if that's actually true, if I'm making that up, but um, I feel like there's also kind of a distribution issue in terms of inflation. But in terms of all the dollars that are being created in order to just service debt, and the fact that inflation today happens when debt is issued, versus just printing out money from thin air and kind of giving it to your friends, which is kind of like this meme that people envision as printing money. I guess that makes sense. Unfortunately, as it's very clear here, I'm not an expert by any means. So just kind of trying to make uh, just trying to make ends of it. Try to understand what's happening in this very complex system.
Yeah, and it'd be much more simple if we did not have debt-based money, because with sound money, you get money by earning it. In a debt-based money, especially at the end of a debt-based money, like you say, you print it, give it to your friends or whatever. There is a distribution problem, but that's because the most credit-worthy people are going to get the loans, and that's where money is printed. So there is a distribution problem, and that is based on being a credit-based system. Um, but the end is not inflationary. The end is that, you know, I just had a long rant on one of my live streams about the old geriatric and decrepit system. That is what we're going to in this quote unquote fiat system, is a slow grind to zero economic growth, to debt burden, such a high debt burden that you can't move. And
Yep.
the only source of growth is going to be Bitcoin. So, yeah,
Hey,
we're
subscribe to Bitcoin and Markets. Go check out the Telegram group. Listen to the rants.
yeah, we could go back and forth on this for ages and ages, but should we go into the last one? No,
just
go.
one last comment on that, and I fully buy into this idea of like, I think people have they have different definitions for inflation, right? And they both think that inflation is just like money printing and the denominations on bills going up, and they've
Mm.
seen like, what do you mean inflation can't happen? They've seen all these countries hyperinflate and destroy their fiat currency. But there's this other kind of uh, viewpoint of inflation, whereas inflation is life, it's motion, it's the actual dollars going down in value against real goods, and those good and the economy growing, and in that sense, I fully agree with the picture that you are painting here, which is that the system is dying, and the issue with the system is that it is a poor operating system for an economy to leverage in order to allocate and manage resources. That's like the key here. So as it is now confronted with Bitcoin, which is a better system for allocating resources, that will become even more apparent. And then the growth on the Bitcoin system, compared to the stagflation and the crippling debt and the inability to create growth and to allocate resources, it's going to become very stark when you start comparing these two systems in the wild.
Yeah, great points, man. The way I think of it is, there's been a debate very recently in Bitcoin about, is there going to be credit in a Bitcoin standard? What form of credit is there going to be? Is it going to be commodity credit, circulation credit, all these different things? And people think that credit is bad in a way, but it's not. I look at credit as that is actual capital allocation happening. It's some guy taking his money and giving it to another person that is better. He's allocating the capital, and that entrepreneur is doing the business, right? So that's capital allocation. There has to be credit in the system. But in a credit-based money, there is no savings. There is no savings because everything is credit in the first place. So you're taking credit and you're either creating more credit or you are lending out credit. That's all there is to it. So that's the problem. And that system works very well when the world is relatively peaceful. There's no world wars going on. There's not a lot of trade wars going on. There's, a lot of expansion that could be had, right? A lot of
Not a
easy,
lot of enemies out there.
not a lot of enemies, low hanging fruit in emerging markets and all that stuff. So that's when that system works really well. But once all of those preconditions break down, then the conditions for the credit-based money also break down. So that's why we're going to eventually go back to sound money, just because those preconditions no longer work anymore. So Oh man, this
Well,
is
and sound money will give a better platform for measuring and evaluating and extending proper credit into the future.
oh yeah, definitely, definitely, because then you're lending savings, at least to a high degree. You're lending savings and not um, creating new money out of thin air. So
So it's like credit with skin in the game.
exactly, yeah. Interest
Wow.
rates will be higher. Interest rates will be higher for sure.
Well, I mean,
Um,
again, the whole point here is you want your money to reflect reality, because that's the best way to allocate resources is in order to, either react to or anticipate reality. So you need the most accurate tool possible.
exactly. All right. Last story here we have is about GDP. And Chris, can we bring up slide number 8? GDP was revised upwards again. So this is Q3. They go through 3 revisions. They have 1 or 2 revisions. They have 1 release, which you can see in this highlighted box. That's the first one. Then they revised it a little bit up in their first revision. And now we have the second and final revision for Q3 GDP. And it is a little bit higher still. I wanted to read out a little bit from this story here. And let me just get the proper place here. The update from the second estimate reflected upward revisions to consumer spending, which rose 2.3% in Q3, up from 1.7 in the previous estimate, and up from 2% in Q2, as well as upward revisions to business investment and state and local government that were partly offset by downward revisions to inventory, investment, and exports. Looking at the bigger picture, the third quarter increase in real GDP reflected increases in exports, consumer spending, business investment, and government spending that were partly offset by decreases in housing investment and inventory investment. Imports, which are a subtraction in the calculation of GDP, decreased. All right, and then I wanted to do one more chart, and that is the next slide, Chris, please. This is showing how these kind of move here. And I did have to expand it out, so it's a little bit blurred, but you can see it's quarter to quarter change in prices. The top line is gross domestic purchases. The dashed blue line is gross domestic purchases excluding food and energy. Then the orange solid line is PCE. That is like CPI, but it's the one that the Fed uses and the government usually uses for things like real GDP is nominal GDP minus inflation or minus PCE. So this is what they use. The dashed orange line is core PCE. So one thing I said about, I don't know, maybe 6 months ago was that the rest of the year was going to be a race between inflation dropping or CPI, these price indexes dropping versus nominal GDP dropping. And you can see in this right here from Q2 to Q3, we had a steep decline in nominal GDP. That's the blue, solid blue line. So from basically 8.5% down to 5%. That is a very steep decline in actual nominal GDP. It feels like a recession, right? It's 4.5% decline in nominal GDP. But what else happened was PCE, or the inflation index, dropped even faster. And so we had this huge drop, the ability to force real GDP into the positive territory. So that's what I have to say about this. I think it's going to continue. Fourth quarter, we'll probably see something very similar with nominal GDP dropping again, but the PCE is going to drop further still. So it's kind of a race between nominal GDP and inflation, and it's going to end up where real GDP is positive. So, CK, what are your thoughts on GDP as a measurement? It's kind of a crap measurement, but what's your thoughts on this, the revision process, and all that?
Well, I mean, just trying to make make sense of everything here. You know, really what you're in, if you're just like looking through this, PCE has always kind of been less than GDP. And therefore, as long as it stays below, there's going to be some sort of positive GDP numbers, even though from like an overall like growth percentage perspective, it's lower. Is that kind of what you're explaining?
Yes. I mean, this blue line isn't exactly nominal GDP because this is just gross domestic purchases. And there's other things like imports that are factored
Yep,
into
that's
actual nominal
huge.
GDP. But this kind of shows that economic activity slowed down dramatically, but so did the PCE index. And that's why
Yep,
we
the
have a positive
prices.
number. Yeah.
Yep, and that a lot of that is baked into that is energy. Because you can see that if you exclude energy and food, it's relatively flat. So, I mean,
Yeah.
is
That's a
there a
good point.
point? So, do you think that energy and food prices continue to drop, or do you see PCE starting to flatten?
For the US, I think that energy and food will probably start coming back down. But in other parts of the country, or sorry, other parts of the world, is not going to be like that. I think they're going to have continued higher prices, maybe continued price increases in energy and food. But the U.S. specifically, I think we can see flat to down on those, non-core things.
Yep, that makes sense. Absolutely makes sense. All right, Ansel. Well, this has been a technical and information packed show. Thank you for breaking down some of these advanced topics for your boy. I appreciate it. And to everyone listening out there, if you enjoy this content, please like and subscribe. We're pushing out the best content on the internet in terms of Bitcoin, as far as I'm concerned, over here at Bitcoin Magazine. And we need the help of folks like Ansel to do so, and an audience like yourselves, in order to spread the word. So appreciate all of y'all. Happy holidays to everyone out there, and make sure to come to the Bitcoin conference, of course. Bitcoin 2023, May 18th through the 20th in Miami. Promo code BM Live. Come celebrate the end of Bitcoin winter. You know, Ansel's bullish. We're bullish too. May 18th through the 20th. Things are going up. Clear skies ahead. See y'all there.
Merry
Peace.
Christmas, guys. See you on t.me/Bitcoin and markets.
Bitcoin